Alrighty, everyone. I have my good friend Nate Self here. He is the regional sales director for Gilico Guarantee Income Life. So welcome to annuityproducers.com, where we share all the insides and outsides of all the good, bad, and the ugly about annuities, but mainly good. And speaking of good, we have Nate here, and Gilico has been up and coming. We've actually personally helped a number of clients with their plans because of their very high competitive rates, especially for income. I mean, they're almost unmatched in the earlier years. And in addition to that, they offer a growth component with the income, which was unheard of just a year or two ago. But now a lot of companies are adopting this. But Gilico seems to be pretty strong on that aspect. The other really cool thing that Nate's going to touch on is the renewal rate integrity and a few other features of why Gilico is trying to make a big name for themselves in the annuity space and go against all the other big carriers out there. So Nate, maybe you can introduce yourself, share a little bit about your position and why Gilico.
Absolutely. Well, thank you first and foremost, Roy, for having me. I've been with Gilico for 2 years now, and previously I was in the industry, the annuity industry, but with a much larger firm. So I would say the difference between a Gilico and the firm I was at previously is it's more of a family feel. We have 400 employees based in Baton Rouge, Louisiana. I'm in Des Moines, so our sales and distribution teams here in Des Moines, we're trying to steal talent from our competitors. But we really are relationship focused. We do all of our distribution through independent marketing organizations, and we have a very small number of marketing organizations that we partner up with. And to have access to our contracts, you have to be with one of those IMOs that has our contract. And that's going to be how we structure our distribution moving forward. We know the relationships we have are worth a lot. It's really helped us grow tremendously. When we were acquired back in 2016, we were doing $50 million of premium, very small regional insurance company. Last year, we did $2.5 billion, and that's all through our relationships and partnerships with our IMOs. So in just 7 short years, we've grown tremendously.
That is an amazing growth, especially because you're limited distribution. You're not up with every single partner out there. You're just select IMOs, and you went from 50 million to 2.5 billion. What do you think led to that increase besides the relationship base of it and the ease to work with Gilico? Yeah. What do you think really drove that growth?
I think it really comes down to putting the client first. When you build annuity products for the consumer and the outcomes of those consumers are positive, that does, translate through the industry. We try to build products that are simple for the agents and the clients to understand, with the overall outcome of the client being the number one focus. So I think that's really, been the main reason for our success.
Yeah, no, that's great. I mean, just in my limited experience with working with Gilico, I mean, back in the day when y'all had the LTC product, that was pretty good. We had a good experience working with the team. And like you mentioned, small hometown feel, family oriented. We call in and get the same rep almost every time. It was really cool to get that because a lot of these bigger companies, great companies, great products, but it's diluted. I mean, you never know who you're going to get, or they might be brand new and not experienced. We never had that issue with Gilico working on the LTC side. And most recently on the permanent side, on the annuity distribution side of it for the income and the growth, it's been really smooth. I mean, most of the folks that we call in, we don't have to wait on hold for 30 minutes, which is good because a lot of companies you have to. And when we have questions or there's a suitability issue or anything to that nature, it's very easy to resolve and get the data into Gilico, which with other companies, it's very hard. And one of the biggest perspectives that I see, especially what we look for, is always the client's best interest, right? We don't have a bias to one company to either, but it's always nice to, when there is a company like yours right now that's very competitive, it is super easy to work with. Because sometimes we have to go with other companies and just because they're competitive, but they're not easy to work with. And I've heard that too from the consumer perspective. Like if they call in, I mean, most of the agents out here, their clients are going to call them directly, but there are some that just call the carrier. We've had good feedback also on the LTC side and the annuity side, which is really good.
That's wonderful. Yeah, we structure all of our customer service in the United States. So whenever you call in, we pride ourselves in making sure those calls get answered timely and with people that have experience that are easy to talk to. So that will not change moving forward.
That's great. That's great. A lot of us producers out here, we get leery when it comes to renewal rate integrity, unless there's a guaranteed cap rate or guaranteed participation rate. And that's just because we got burned. We tried to help these clients out with these great products, a couple of years ago. And then, COVID happened and the volatility indexes, they became more relevant, but then they're not hitting on interest. And the standard of the S&P 500, those index caps and pars dropped dramatically with the option cost being so high due to the volatility that we get kind of nervous. Because if we're going to help a client go into a 10-year contract, we want to have the confidence of knowing that at least this company is going to have, historically strong renewal rates. And to my knowledge, I think there's only about 3 firms out there that actually publish the renewal rates. And I know Gilico is one of them. Can you maybe hit a little bit on why that's important for Gilico and the reasoning that you guys actually publish it? And is that like at the core foundation of the product distribution for you?
Yeah, and again, it all comes down to putting the clients first, and transparency is incredibly important with these index annuity contracts where it seems like the carriers hold a lot of the cards, right?
Yeah.
You want to be able to share how does the carrier price the product? Are they front loading it to make sure that the rates up front are really good, or are they spreading it out for the length of the contract because the client is intending to hold it for the full 10 years, right? So we use a level option budget. And all that simply means is we're spending the same amount year 1 versus year 10 on call options. Now, the one thing we cannot control is volatility. So if option prices go up and we have the same amount to our option budget, say in year 3, we will be able to buy a little less. But at the end of the day, we price the products to hold the rate throughout the length of the contract with a stable option budget. And thus far, in 4 consecutive years, we've yet to drop an index renewal rate on a consumer on any of our index strategies.
Wow, that's awesome. Have you increased any of the caps or pars on prior products that were sold?
We haven't increased them, but we haven't decreased. So they've all held stable, and it is pretty rare to see that with an increase, unless you see a dramatic decrease in market volatility.
Oh yeah, no, it's incredibly rare. I mean, we have I think close to 2,000 clients now, and maybe one time I've seen an increase, and it was on an excess return strategy. Most of the times it's just going to drop, right? And historically, there's only a few carriers that we've ever experienced that have not dropped it, and that was without a cap or par rate lock. But that's what gives us confidence in Gilico. And to be quite frank, we've known about the product for a while, but we wanted to see, because I remember the first time the renewal rate integrity sheet came out, it was only like 2 years of back testing. I'm like, it's not quite enough time. But now that we have 4 years of back testing and not one single movement in the downward position, that makes me feel way more comfortable. And when I tell clients, like, look, these rates can change. They are not guaranteed. And so you need to understand that, because if they do drop the rates, it's going to lower the internal rate of return potential. But you still have no risk or fees on the growth strategy. But and giving that confidence back to the client, being able to say, hey, look, we believe in this product. And in fact, I'm looking to purchase my own Gilico contract here shortly, because a lot of the plans that we help folks with, we put our own money into. And that really helps too, because in my opinion, if you're an annuity producer out there and you're representing a particular company and you have the belief in it, what better way to build the foundation to actually own it yourself? And you can show people, look, I even own the contract. And I think the minimum purchase price on this is what, $20,000 in premium?
That's right. Yep.
Yeah. So even if you're a producer out there and you're going to be representing the company and you see the long-term vision, you should highly consider purchasing one yourself, because it shows the belief. And if you're not willing to put your own money into it, why would you put your client's money into it? That's the way we look at everything. Because most of the agents and advisors, they don't own the same plans that they're recommending, right? I mean, the only plan restrictions that we have is based on age, where I can't buy the income rider. I would if I could, but I'm not even 40 yet, right? So I need to get a little bit older. And I tell folks that, like, hey, look, I have the growth plan, which is similar, just doesn't have the rider, because they won't give it to me. My parents timed it wrong. I'm still a little bit too young. But the other thing too that I think is very valuable about Gilico is their income rider, because not only is it one of the highest paying riders out there for the form of income to the client, but you also don't have a reduction if it's single or joint, right?
Yes, that's correct. We're the only carrier, to my knowledge, in the industry that you can add your spouse at no reduction. Now, so if you have 2 65-year-olds, it's going to be the exact same payout, 7.6% for the rest of both of their lives. The only difference is if you have a 66 and a 65-year-old, we'll just base it on the younger spouse, the 65. Well, that's not uncommon to do that. We're just the only carrier that does not have a reduction to add a spouse. And the reason we did that is we don't want to have the hard objection. Should I add my spouse? What's the break even point? It's always a difficult conversation. Of course you should add your spouse. It's to cover both of your lives. So.
Right. Yeah. You just made it real simple. You just say, hey, look, you know what? There's not a reduction. We're just going to base it on the youngest, like any other type of pension formula would be. It's just based on the youngest. But that's also creates simplicity in your plan too, because we don't have to try to explain this magical income rider account value, right? Because all the time, like, well, I was guaranteed 8%. Yeah, that's your roll-up rate on a hypothetical account value that's not even yours. They take that value, then they multiply it against your age percentage. With Gilico, it's very simple. It's like, here is the account value, and this is how much income you're going to get. So you guys don't have an actual income account value. You use an age percentage factor. And I don't know too many other carriers that actually do that.
No, there's only one product to my knowledge that's built like this. And we did it again for transparency, putting the client first. We don't want to try to confuse them. You get one value. You can use it for growth. You can use it for growth and income, or you can just use it for income. So it's a really streamlined product development strategy, again, to put the client first.
Yeah, that's all. And it makes our lives easier because on other carriers, they're also good. But it's like, okay, so you have this account value that's growing at this simple or compound rate, and it's going to grow for 5 or 7 years, and then you might have to renew an option to extend it if you don't take income. But don't worry about this account value. And then the other big challenge is that a lot of the fees on the rider, they're actually calculated on the income account value, and then they are then deducted from the account value. So when you represent a fee of, say, 1%, it's actually much larger than 1% because it's based on a much larger number being deducted from the account value. And I know with our product here, it's very simple and straightforward. It's like the rider fee is based on the amount of premium plus any bonus, and then it's locked in for the whole time. Isn't that correct?
That's right. As soon as you activate the rider, that fee is locked in. It's not going to go up. It's not going to go down. It's locked in. And it's just on the account value. That's the only bucket of money we have, which is really nice.
Yeah, see, that's also very easy for the client to understand. Now, some other carriers, they base it on they will base it on the account value, and the fee is deducted from there, and so that fee will go down over time. Whereas ours, Gilico's will stay the same. But at the same point, when I'm showing clients this, I was like, yeah, will this fee actually represent more than 95 basis points in 10 years? Yes, it will represent more than your actual account value, but it's very transparent because it is what it is from day one. And guess what? By the way, if you don't want this and you just want to take systematic withdrawals out, you can have that too. All the rider is simply adding an additional layer of insurance, additional layer of protection for the purposes of lifetime income. So if you don't want to think about it and you just want that guaranteed check, this is a great plan. Or you can own the very same one with no fee and still have the same growth opportunity. You just won't have the guaranteed lifetime income. Which one makes you feel better? And when I show people that, It's amazing because all the other carriers, or the most of them rather, it's, if they don't want an income rider, then it's a whole other product, different index selections, different rates. Whereas with Gilico, I'm like, you can have it with or without it. Which one do you feel more comfortable with? And it doesn't affect us because, to the consumer's perspective, a lot of times they may see that fee is going to earn us more in commissions. And it doesn't. And I casually joke around with people all the time. I say, hey, you know what? This fee, I don't get it. I wish I did because that'd be great. We're writing $40 million plus a year in personal production. If I got 1% of that, I probably wouldn't be here right now. I'd probably be on the beach somewhere. But we don't get that fee. The insurance carriers, they take a portion of that fee and they're actually getting additional reinsurance because they don't know how long you're going to live.
Right. That's right. The other thing I would like to say is if you ever have a client who likes the concept of an income rider and they think they have a pretty good idea when they want to turn it on, but they're not 100% positive, this is a great product because the fee drag is going to be much less, as Roy alluded to, but it's also, you can remove the rider at any time. And when you remove the rider, you're still going to have the really great accumulation rates backing the contract. We have double-digit cap rates on all of our index suites. So it's a really good product if you ever have a client who he likes the idea of the rider, but is not 100% sure.
Yeah, I
Usually
like
you're going to forego the accumulation.
it's very true because on most carriers, like they'll allow you to take off the income rider, but if it's for the purposes of income, you get like zero cap rates and or just a fixed bucket. So it's almost pointless to actually to have that. Speaking of flexibility, I think another really cool point is that you allow for 10% access after 30 days. Not that anybody buying a long-term annuity contract should be needing the access, because if they do, it's not the right plan. But it's also nice to let clients know, hey, you know what? If I want access to it, I have that ability. I'll give you a live case example. We had a client that we offered two different solutions. One was with a competitive carrier that had a 10% bonus up front and similar caps and fixed rate and pars, but then they could only touch 5% of it. And they're like, I like that idea, but I also like the idea of getting a little bit more if we wanted to. So it wasn't a need because they had an enormous amount of outside liquidity. It came down to the principle of accessing their own money. And they liked that idea of the 10%, especially after 30 days. And that's why they decided that Gilico's product was most suitable for them in that situation. So that's really rare too. There's only a few companies that I know of that actually give the client 10% access within the first year.
Yeah, and that includes the bonus version too. So even if you go into the bonus product, you can have 10% of your premium back immediately if you need it, which is incredibly rare. In addition, the bonus product only has a 5-year recapture on a 10-year chassis, which is also rare. Most recaptures, if you're in a 10-year bonus product, the recapture schedule is going to go the full 10 years. Ours is only 5 years and only ever comes into play if you have a surrender. So it's very flexible for the client, even on the bonus product.
Right. So if they were to take out 10%, if they put 100 grand in and then 30 days later they took out 10%, i.e. 10,000, then how does that affect the bonus? How does that bonus is going to get applied to that?
There would be no impact to the bonus. So the bonus on the 10 years, 5%, it is immediately added to the account value. So it'll immediately be 105,000. The client would have access to 10,000 in 10% of the initial premium. There'd be no recapture. And then in the second year, we look at the year one ending balance, and then they could take 10% from there. So the only thing they can't do is take portion of the bonus. So 105,000, they couldn't take 10,500, but they could take 10,000.
Oh, that's really good to know. And that's also good to know that there's no vesting on the death benefit of it, because some of these carriers that offer these enormous bonuses like 10, 15, 12%. I mean, there's carriers now doing 24% on some things. It's like if the client dies, then that bonus is also the death benefit of the policy is also the bonus vesting applies to the death benefit. Whereas with us, if they pass away, it's like, look, if they own the contract 100 grand in and they got that applied to the account, and then 3 weeks later they pass away, their family is going to get 105,000, which is nice. Hopefully that doesn't happen, but it's nice to know that they're not foregoing that bonus either. Now, don't we have an enhanced death benefit feature part of this that's spread out over like a 5-year period if they choose to?
Absolutely. So it's built in automatically. You don't have to choose it on the application. The way it works is if the client passes away and the beneficiary takes a period certain payout of 5 years or longer, that account value, that's the death benefit, is going to pay out at 110%, guaranteed. There's also a way for the owner of the contract to put a spendthrift so that the beneficiary can't take it out as a lump sum. And that way they can guarantee that upon their passing, their legacy could be paid out at 110%.
That's cool. That's a nice feature. I mean, I think most people would probably take it up front because they could do better over 10 years. That's like 2%. But in certain situations, it's also nice to know that like maybe the clients don't want the family to get the money and just like if it's going to their kids and their kids are younger, like, they're probably just going to blow through this. I'd rather have it just spread out over a period of time. That's what my wishes are. And so that could come in handy there for sure as well.
Yeah. And back in 2020, that 2% guarantee was actually pretty nice. Now it's not as attractive, but it's automatically built in case 2% in the future is a nice guarantee.
Yeah, that's what we tell a lot of folks too. They're like, well, right now I'm getting 5% liquid in the savings account. I go, right now, sure. And I'm not opposed to that. You should have plenty of liquidity. And yes, you should be maximizing the interest rate, but it's not always going to be there. Right? Rates are going to come down eventually. And they've even publicly announced that. When will that happen? Who knows? But if rates start coming down, then your savings rates go down. But one of the values of this plan is that you have an opportunity to, one, get a 1 year locked in rate right now. And then obviously that's probably going to change over the course of time. But a lot of the clients, they say, you know what, let me just get this 5+% right now locked in for 1 year. And then next year I'll move my positions over more towards the S&P if I choose to, which is really cool because you can, toggle this once per year. Now with Gilico, do they get the opportunity to reposition their allocations within a 10-day window after the anniversary, or do they have to make that election before the anniversary?
Great question. So we send out a notice 30 days prior, letting the client know what their renewal rates are going to be. And then after the anniversary date, they have another 30 days.
Oh,
so
wow.
They have a 60 days where they know what their renewals are going to be and what they could reallocate to and make that execution. The other thing I think that's definitely overlooked in our industry is the contractual guarantees. Our fixed account is at 5.25 year one, but worst case scenario, for as long as the client holds the contract, the worst it can renew at is 2.75. That's not just for the surrender period. That's for 15, 20, 25 years. Now, 2.75 doesn't sound like a great rate right now, but if you look at the 1 year treasury over the last 14 years, 11 out of those 14 years, that 2.75 would have been better than the 1 year treasury, and the client would have had no interest rate risk. So I highly recommend it, next time you look at an annuity contract, look at the minimum contractual guarantees, because there is tremendous value to the client.
And that's in the fixed bucket, the 2.75.
Yeah, that's right. It also impacts the minimum guarantee cap surrender value. So your non-forfeiture rule. But then 2.75 is the minimum renewal rate on the fixed account for life.
Yeah, that's awesome, because like you said, I tell people this all the time. I'm like, man, just a couple of years ago, you couldn't even get 2% in like a 5-year CD, right? And this is an opportunity to have that locked in, worst case scenario in the future, if something were to happen, or if you just leave it there. So you will actually allow a client, even after the 10-year surrender schedule, to keep getting that 2.75 in the fix.
It's locked in for life as long as the client holds the contract. Yep.
Wow, that's pretty cool. Yeah, because most people that own these, if they're buying it for growth, they're going to reposition it in the next, 5, 7, or 10 years. And that's another point I wanted to bring up too, is that some folks are reluctant on a 10-year. Well, you can have very similar rates and features with Gilico, and you can do a 5-year play or a 7-year play. And so if you are securities licensed and you need to stick with a 5 or 7, you could do that. Plus we have the A rating, which also helps with different distribution channels and client comfort levels as well too. Because some clients, they don't want to be plus, even though they may be financially stable, they want that A rating on there. And that's nice that we actually have that. We could say, hey, look, A rated, been around for a long time, great renewal rate integrity, guaranteed fixed rate, at least at 2.75. So if everything, falls apart in the economy, at least you get that. And just a couple of years ago, that would have been a killer rate. Right now, it's not, but the rates that we have today aren't always going to stay.
Exactly.
So if they want to find out more about Gilico, well, number one, you have to see wherever your current contracts are, right? And at Annuity Producers, this is not a recruiting platform. This is an information platform. But if you wanted more information, you can easily reach out to myself or reach out to Nate, and he can help show you the companies or the IMO partners that actually offer it. We offer it through our channels. We have 2 different channels that we offer it through. So you can come through us, or if you wanted to see if your current relationship offers it, just call your sales and marketing guys. Say, hey, look, do you have Gilico? We've heard about some great products and rates, and I want to see if I can get appointed and learn more about it and go from there.
Wonderful. Well, thank you so much for having me, Roy. This was a great conversation, and it has never been a better time to be in the annuity business. I've been in the business for 8 years, and rates right now are holding strong. So it's a great time to be locking in long-term income riders and get them into longer-term contracts with good renewal rates.
Yeah, this is the golden age of annuities, because to your point, we have the highest interest rates in recent history helping us. I mean, these products sell themselves. It's all about just educating the client, showing them the options, and it's hard to say no to them. And it's not always going to be this hot of a market. In addition to that, we have the whole demographic shift of, 12 to 15,000 people a day turning 65. I mean, 2024 is the peak of the boomers turning 65. So it's great if you're in the Medicare practice and you're looking to get into the annuity space, or if you're full-time in the annuity space and you want to really take advantage of these rates, you have to shop these companies, and you have to take a look at Gilico, because right now on our income tables, they're dominating in most cases for early income. Plus, you cannot beat the fact that they actually have renewal rate history published that's accessible that you can see, because most companies don't have that. So check out Gilico, call your marketer, reach out to us, and we'll be happy to help you get access to this product so you can better help serve your clients. Thanks so much, Nate. We appreciate you, and we'll talk to you guys next time.
Yeah. Thanks, everybody.
All right, cool. Nate, I'll give you a call.